Herzlich willkommen zu einer neuen Ausgabe SI Talk. Ich bin wie jedes Mal eigentlich bei MoGo da. Warum MoGo ist erstens einmal Conflict of Interest, ich bin Aktionär. Zweitens einmal, ich habe schon 2 oder 3 Mal nachgekauft. Und drittens einmal, ich glaube, dass das eine der Stories sein wird, die in den nächsten Jahren wirklich den Markt hitten wird und dementsprechend auch promoten, also laufen wird. Und deswegen bin ich so intensiv an der Story da. David, I tell this my subscribers in the introduction. First, I have a conflict of interest.
Right.
I have shares. I bought more after our last interview.
Yeah.
It was a little bit too early, so it's like. But I also, not only that I believe strongly on your company, it's also that we have really a buying opportunity here, and I believe this is one of the stories. One of the picks of my favorite picks this year, next year. And hopefully the selling is sometimes over and then we come into a new trend.
Right, exactly.
But the most important thing is your app.
Yeah.
Everything is electronically on your side, and you have this credit score.
Yeah, credit score,
And the people don't know what's credit score. In Europe, we have have credit scores, but not official.
Yes.
And every banks do their own stuff a little bit. And there's sometimes or some areas they have overall company. They do a little bit research, but more on the company side, not on the individual side. But you have really a free score, and what this mean is a high number is good, and a low number
so as you can see here, so this says it's good, 696, and as I go up and scroll up, it goes from good to very good, and then from very good, it gets greener and greener, excellent, right? And then eventually, if you go over 850, we call it rock star status, right? Like you're in the top.
Okay.
So the top, 10% of Canadians would have a rock star status, right? 900 would be the highest that you could possibly go.
And what hits the mark? How the number come together? What must happen that I get a good credit score?
Right, exactly. Yeah. So what drives the score are these factors down here. So what makes up a credit score is your payment history. So do you ever miss a payment on any of your bills? So in Canada, there's 2 main credit bureaus. Equifax is the largest credit bureau in Canada. So that would be the main one that the banks and lenders are looking at when they're going to assess whether or not to give you credit, but also assess whether or not what rates to charge you. So for example, in Canada too, there's some recent rule changes around mortgages, and the Canada Mortgage Housing, so CMHC that insures mortgages in Canada, will not insure a mortgage if you've got a credit score under a certain 600. You can't even get a mortgage insured. So literally, if you don't have a certain score in Canada, you literally cannot even get a mortgage, right? So, and obviously to buy a home, you need a mortgage.
So mortgage is one of your next products.
Yeah, so one of the next products. So if you look here, so today we offer credit score, free credit score. We launched this aggressively with free monthly updates. So every month we also update your score. So people have to every month come back into the app and see what their score is. You can see in here my score has gone down 3 points since my last update. The next update on November 1st, it'll update again. We'll get a push notification saying, hey, your score is updated. And then you go into it, you can see it. So every month people have to log back into their account.
So that means you're a little bit lazy on your payments.
Well, but it could mean a couple of things, exactly. So it could mean payment. It could mean utilization rate. So one of the things that drives your credit scores is your utilization rate. Okay. So how much of so even if you pay your credit cards off every month, on average, you may sit there and you owe $10,000 in your credit card, even though you pay it off every month. And if you only have $20,000 in credit available, utilization rate is 50%. If 1 month you ended up using a lot, you had a lot of expenses, and you're at $15,000, all of a sudden utilization rate is 75%. That's going to hurt your credit score that month, right? Wow. So, but every month people come back into the app to see their score, and that's when they bump up against our other products. So in here, in my account, I'm pre-approved right now for $15,000. So I may not take this loan out today, but every month, and I have an account, every month I come back into the app, I'm seeing my credit is there. Obviously over time, I'm going to get more and more people that are going to eventually convert into these other products that we obviously drive revenue, right? And as you can see here, it says expires October 23rd. So this is also how you communicate with people. Right on the offer, it shows on the 23rd, my current pre-approval is going to expire, which means if I really want to take advantage of this, I better do it now, right? One of the new products that we're launching, so this is my app, is our MoGoCard. And the MoGoCard, this is not launched broadly. We have it in beta right now. We're going to be launching it broadly this quarter. But essentially, it's a free card, free spending account, and it's complementary to people's bank accounts. So this is all about spending and staying in control. So you basically attach this to your bank account, and then you can literally load money directly from your bank account directly onto your MoGo account. So it links to my bank account. I can transfer money directly from my bank account onto my MoGo account. That money then shows up instantly on here. You get a push notification as well. So as soon as that money is loaded, for example, where is it right here? Your card has been loaded up top, right? With $2,000, I get a push notification. And then every time I use it, I also get a push notification when I use it, right? So you can see here, you spent, $55 at Nat's Pizza. Your balance is $2,500. What's nice here is I don't have to log back into my account to see my balance. That push notification comes right away, and then obviously I can control all this stuff in here. If I forgot my PIN, so in Canada we use a chip PIN and a card, so if I forgot my PIN, I can actually click what's my PIN and it'll pop right up. And all of this stuff is, you can control it all within the app.
Coming to the safety reason, we know exactly that's very, a lot of information there. So what's happened when I lose my phone?
So if you lose your phone, obviously, if you lost your phone, you still have the card itself. You can have the card itself, right? So here's your actual card.
You're split. You have the card.
Right.
But this guy has your PIN, but you cannot pay directly.
But right, and exactly. So now it will be enabled in Apple Pay as well. Yeah, so just like on any other card, right? So in today's world, if you lose your wallet in that, you typically call your providers, your bank, etc., and you say, hey, I've lost it, we cancel it, you reorder the stuff. Obviously, most people's, I lost my phone, and let's say I didn't have my phone locked, even if they got in, they actually wouldn't be able to get into my MoGo account without knowing the password, right? Or having the fingerprint, so there's security there. And even if they got past that, they'd have to go through another layer of security even to get at something like my sensitive information like my PIN. So there's multi-factor authentication. And if somebody ever did do anything, you'd also get an email notification so you'd know whether or not that's been compromised. At the end of the day, though, because it's a Visa product, your users are protected by Visa's zero fraud liability. So even if this card are lost or stolen or the money, whatever, the user is covered, right? But one of the things I was going to tell you about too is just we were talking about some of the things that's going on in banking, like Wells Fargo and the issue they had with cross-selling, right? So essentially, banks are starting to get really watched because they live in a traditional branch model, and what happens, a lot of their customers come to the branch and they say, hey, Joe, I want to sell you on the new credit card, and he basically opens a credit card in your name and another account in your name, and that's how these guys get bonuses. In the digital world, all that happens digitally. So you essentially take all that human interaction out, and so there's 100% transparency. The only way somebody here is opening a loan account is because they clicked into it and they went through this process to get a loan, right? So our goal here is digital cross-selling in the future of digital banking was going to happen in a digital way, right? And the nice thing about that is full transparency. The user, there's no chance that you're not leaving up to a human being that is incentivized to try to open an account. You're creating a digital experience in which the customer is opening an account, including things like optional loan protection or insurance. Even that stuff, there's no chance that somebody's going to do what they call an assumptive close, where they just kind of sell somebody a product that they really didn't want. In the digital world, it's fully transparent. It says, here it is, you need to agree to it, sign to it, click the button, etc. And so it really takes all of that stuff away, right? And that's really where we're going. So
Come to numbers.
Yeah.
How many people use this app or this MoGo?
Well, so again, we the last member number we gave was 250,000 members. We're going to be announcing another member milestone here shortly, so it hasn't been announced yet. I can't divulge it. We have said though, since our account, since we kind of launched the new digital account, we've had an accelerated account openings, right?
What is with the new product? With the new MoGoCard and with the mortgage?
Yeah,
when we can expect this?
Yeah, so in Q4, so we're in Q4 right now. We're expecting to launch MoGoCard and MoGo Mortgage this quarter, right? And the MoGo Mortgage is going to show up in the dashboards here as well. So you'll be able to see the MoGo Mortgage right there. You'll be able to click into it. It'll walk you through all of the benefits and features of the MoGo Mortgage. We'll be 100% competitive with the bank. So typically we would look to even offer a better rate with the bank than the banks. Now, we're the broker. We're not the actual lender. So we partner with lenders. So we would, for example, have multiple lenders that we partner with. And then they're the ones that are actually lending the money. We control the user experience. All that information comes into the dashboard of the customer, so they keep their MoGo account.
You go directly in competition to the banks.
Yes, so we'll be competing directly with banks.
So, what is your expectation about mortgages? What are you planning for next year? Or what do you hope you can get?
Well, so without giving specific numbers for next year, what I can say is there is 450 billion a year in mortgages originated in Canada, right? Today, almost 40% of that are done through brokers today. So, and the banks are doing about 60%. In fact, 55% of first-time homebuyers are getting mortgages through brokers, and we effectively will be a broker. The benefit and advantage we have is brokers today in Canada, none of them are digital. They're typically over the phone. They don't have mobile apps. They don't have online application process, etc. That's what we specialize in. Even if you got a mortgage today with a broker, they would then essentially effectively say, okay, I found this company XYZ lender. They're going to lend you the money. You then go through the process with me as a broker, and then I hand you off to the lender, and then you now have this mortgage with some lender that you don't know. And you would have to log in online, whether or not they have an online portal. None of them have mobile apps. So the big benefit for MoGo is you already have an account. We already have thousands, literally, over 10,000 people a month signing up for a MoGo account. More than 60% of them are prime consumers. These are the ones that are most likely home buyers, right? Mm-hmm. And that's where the big market opportunity. So you can imagine we have tens of thousands of leads sitting here with a MoGo account today that are checking their credit score, and then we're going to offer a mortgage. You already have an account. We've already got your information. We already have your bureau information, your income, all of this kind of stuff. So now you're only a few steps away from actually getting a mortgage with MoGo, whereas if you went with anybody else, you'd be starting from scratch. And then the benefit that as you have more and more products with us, you obviously have more convenience by having things consolidated, like a bank account. But the advantage we offer over a traditional bank is we have a better experience, we have more competitive rates, and we also have a better product to help you kind of get mortgage free as well. So we're putting more energy into the actual experience as well once you actually have a mortgage. So this would be something, for example, the bank today, if you can open your account 3 minutes from the app, whereas at the bank you'd have to go in the branch to open the account, right?
Before we go to the bad part of our interview, and it's the share price. What are you planning for next year? This year is card and mortgage? Yeah,
so I would say our big focus is really starting to ramp up the card and the mortgage product in next year, and that'll be the focus, is really focusing on growing those products. So if you think about today, we have, again, over 250,000 members. We have a portion of those members right now that have loans with us, so they're driving revenue from that. We're going to be launching the card and the mortgage product. So now we're going to have 2 other products that we can drive revenue from. So now within the MoGo account, there'll be 3 products that we can drive revenue from on top of the free credit score. Free credit score is bringing customers in. They're checking back on a regular basis. And now we got multiple products in which to sell them into.
Revenue and cash burn rate. At the moment, you burn down around 4.5 million per quarter.
Right, yeah.
What do you think, or what you can hope with the new product coming down the cash burn rate to what kind of level? Yeah, so
as we have said before, we are still very much focused on basically moving to profitability, right? And as the first step on that, we guided to EBITDA positive in Q4, so we still plan on being EBITDA positive, right? So if you think about it, this year. So if you think about it, we've made a continual improvement in our EBITDA from continually improve that EBITDA loss with the goal of getting to EBITDA positive in Q4. And obviously then with the expansion of new products and more revenue opportunity, that's going to continue to move us towards this profitability model, right? So, obviously that's now that we have literally hundreds of thousands of members and we have this new digital platform out there, which nobody else has, and you got these multiple products, we're going to have even more ways on how to accelerate the revenue. And at the same time, the more we launch these products, like the app, we're more and more working to complete digital self-serve experience, so more efficiencies. Whereas previously you would have had to call in for certain features and certain things where we have to have CSRs that are dealing with you. Now more and more it's a self-serve thing, so you can open an account, get your credit score, get the card, all without talking to anybody. So your expenses continue to go down as a relation to your revenue. So more revenue, less expense, more efficiency, and ultimately profitability.
I think, and now I come to the share price.
Yeah,
the share price is not really what me as a shareholder really.
Me either. Yeah.
I really like the product,
Yeah.
but I have the feeling that a lot of people have the fear that you have a lot of money. But last quarter was 24 million or something. But with the burn rate of 4 million, the people expect end of next year you need money. I would say, as a good company, middle of the year you go for new money. And that drives, I think, the share price down. That the people expect you need a private placement. So, and a private placement with $1 or something is pain in the ass when you're coming with an IPO of $10.
Yeah, I agree.
So,
pain in the ass.
I think I have the feeling that this is maybe one reason why share price is going down. But I was really wondering, and you have around 8.5 million or 8.8 million shares outstanding. How many shares are, especially in the last week, are coming to the market and sell it down? Do you have any idea from which side they are coming?
Well, so here, what we do know is, if you look recently, it actually hit a low of 110. I think today, I don't know where it was at, 148 or something. So it's actually from a percentage from the bottom, right? And actually, we're starting to. So there's clear we still had a few sellers. We don't know who they are that are kind of trading out. I can tell you, all these people. It's not like there's cheap stock out there. These are people that probably bought the stock much higher and they're selling out, right? And there's a very small relative float as well, right?
Yeah, that's a for sure problem that the liquidity on the market is really low. And this comes also then, I think you and your brother have a big chunk or a group of has a
exactly. And by the way, I've been buying as well. I bought all the way down to 140, and then I couldn't buy anymore because we're in a blackout. Otherwise, I would have been buying all the way down here as well.
Okay,
right?
So
I can't buy since our blackout. So our blackout started at the end of the last month. We're now, so that Q3 is finished. So now I'm in a blackout. So you can think about it for me. I'm the single largest shareholder, right? As I mentioned before, I mean, I bought $400,000 worth of shares up at $9 before we went public. And between my brother and I, we've purchased several $100,000 in the last, say 6 months, right? And I've never.
So coming back to the question of the share price. Before we have the interruption from my battery. So you're a single shareholder, a largest shareholder. But what I have really a little bit fear is that we are coming in this the tax loss selling season. And the people need some stocks, they're going down, they have loss on it to can account this against the gains from other stocks. So, and you're a perfect example. You are down so dramatically. The people sitting on a lot of losses. And the tax loss season starting now and goes to mid of December. So I'm hope not that we're going longer down but the road, but it's it's really a big problem. So you don't know really who are the sellers.
We don't. As much as you try to find out, obviously people can stay anonymous, so it can be hard. But what I can say is we're starting to. The good news too, when you see volume, that also means there's buyers, right? So now you're starting to see some really good volume. I can tell you that obviously we're out there telling the story. We've got some really big product launches coming up. We're starting to get more of a profile. People are starting to get smarter and more savvy around this space, the fintech space. As I was saying earlier, when we kind of went out there, it was still early days. A lot of the banks and that are essentially just starting to get smart in the space as well. We've seen some of the new players, competitors of ours, kind of pivot away from some of the stuff because the reality is they can't get financing. People are realizing that, hey, just a minute, you need a certain scale. We're close to a $50 million revenue run rate. We have 285 team members. We've invested over $120 million in the business. We have this $50 million plus marketing partnership with Post Media. Huge advantage. We've got, we're the only full spectrum lender in Canada. We're the only one with a mobile app. We're the only one offering a free credit score, a free monthly update. There's 25 million Canadians with a credit score. 90% of them are not tracking it. We have the potential to have millions of Canadians download this app for free and get into the MoGo ecosystem. We haven't launched our Android app, which is more than 50% of the market. That's going to be launching in Q4 as well. And again, we've got this the MoGoCard. The card is free. There's no monthly fee. Canadians are paying close to $15 a month for their typical debit card to get, and not as good of an experience as what we're delivering. So we've really created this unique platform with very unique products that are very differentiated, right? The free credit score, free monthly update, the free spending account with a platinum prepaid Visa card. We have a competitor out there today that doesn't have the app that is charging $15 for a month and $20 for the card for the same program that we're going to be charging nothing for. But our revenue model is the interchange revenue. We get a percentage of the spend. So the more people spend, the more revenue. So for example, on my MoGoCard today, I'm generating MoGo close to $40, $50 a month in revenue. Even though I don't have a loan outstanding and get a free credit score, because of the card, I'm generating $40, $50 a month in revenue for MoGo, and the card isn't costing me anything, right? So very differentiated and unique product set. A digital platform that nobody is even close to, not the banks, not any startup. The startups aren't going to get the funding. I mean, this is the whole point. None of these guys are going to get the kind of funding that we've got. At best, they've raised $5 to $10 million in funding. So on top of that, we still have a $250 million in credit facilities available, of which we're about into them about $60 million as well. And when you actually look at the cash burn, the reality is a lot of that cash burn is actually money also invested in growing the receivables, right? When we launch mortgages, we can do $1 billion in mortgages and we don't fund one penny of it. We just get revenue. So it's a much higher margin product too. If you look at the average mortgage in Canada is $350,000. When we originate a mortgage as a broker, we get $3,500 revenue cash up front. Unlike a loan today, when we fund a loan, we obviously have to put money out because we also have to fund a portion of the equity, and that's part of our credit facility. So if we put $10,000 out on loan, we have to fund $1,500 of it, about 15%. And then that customer may be in a 3-year loan, and you wait over 3 years to get your revenue. In the mortgage product, you get that revenue right up front with zero at-risk capital. And on top of it, because we've got this Post Media deal, we don't pay any money out front for the advertising. So we can go out there and do a $10 million ad campaign on mortgages, and if it doesn't generate a penny in revenue, we don't pay a penny for it. If it generates $1 million in revenue, we pay $110,000 in fees to Post Media. If it generates $10 million in revenue, we pay $1.1 million. So it's performance-based, and it gives us this massive opportunity to build a brand. We now have the platform, we have the members, we have over 10,000 members a month signing up that are basically going to be leads for our mortgage. Over 50% of them own homes. Right? So if you think about what we have, I mean, this is and the reality is no different than if you look at like an Amazon model. I mean, there's no shortcut. You have to build the platform. If you want to be a digital bank, you have to investigate, build a platform. That takes time, that takes capital. But we have now come, you can clearly see we've got a product now. And now we have an ability to really leverage it. The more we leverage it too, the more efficient we get, the more we build that moat, competitive advantage versus everybody else. And that's really what we're going to be focused on in 2017, is really driving these products, driving increased revenue from the members while we're going to continue to grow our member base. We're going to announce a member milestone here in the next few weeks, which I think is going to show people how the traction that we're continuing to get. So my hope is the market will continue to see a lot of really good news come out of MoGo, and we're going to start to get a lot more believers in the story.
This was an excellent sales pitch.
Okay, good. Going to buy more shares.
This was really a good summarized, and I'm a strong believer. I told you, I'm a strong believer in the company.
Right.
And that's the reason why I buy 2 or 3 times now.
Exactly. Average down, that's right.
Average down. I must average down.
Yeah.
Ja, das war jetzt ein perfektes Zusammenfassung, was er gegeben hat, was sie eigentlich alles geleistet haben oder was sie alles eigentlich schon gemacht haben und was in der nächsten Zeit eigentlich ansteht und warum man diese Aktie eigentlich kaufen kann. Es hat bei mir überhaupt nichts geändert. Ich bin jetzt genauso noch immer überzeugt davon, dass die Company eine der hautesten Aktien in den nächsten 1-2 Jahren sein wird und dass wir weit entfernt sind von den Kurse, also bald werden wir sehr traurig sein, dass wir die Kurse nicht mehr haben und dass wir wahrscheinlich zu wenig gekauft haben. War ein extrem guter Sales Pitch, was er da jetzt mehr oder weniger gemacht hat, und das war eine perfekte Zusammenfassung. Das war's von MoGo und mir. Entschuldigen Sie die kurze Unterbrechung, aber da ist die Batterie der Kamera ausgegangen. Das kann mal passieren. Das war's von MoGo Vancouver, Oktober 2016. Tschüss.